I hear it all the time. I hate numbers. I don't want to deal with them. I get these reports from my accounting department or my CPA and their gobbledygook, or even my tax return. It's all gobbledygook. I hate numbers. I just want to run my business. I hear that all the time. And so I wanted to do a session today to talk about that. I've had recent conversations so recently such that if they happen to hear this webinar, they may think that I did this webinar in response to a conversation that we had. And it's not. I plan these in advance, and it's just a common subject that comes up when I work with business owners. People want to run their business. They want to be confident, and there's just not a lot of training historically about accounting issues, financial reports, finance, and so it adds a lot of uncertainty. It adds a lot of confusion. It adds a lot of knocks to a person's confidence, and people don't want to deal with it. I understand that. So we're going to talk about that today in today's session. Money, money, money. Build confidence in understanding your business's finances, even if you hate numbers. And here's a guess. I'm going to tell you, you probably don't hate numbers. You just don't like the uncertainty. Hello, my name is Carl Baker with Baker CFO Advisory. Thanks for this next issue of this next iteration of our webinar series. And thank you, as always, for joining. We hope that it's adding value. And before I forget, as always, as you navigate through this, if you see our website on there and you see my email, don't hesitate to reach out if you have questions, if you have ideas about what you would like to speak about, like us to speak about. Feel free to reach out. Thank you to my team for helping me put these together and for all of our marketing outreach. We really appreciate Pearl and Meredith for helping with these. So let's go ahead and get started. You've already heard my opening comments about my common conversations, common things that come up when I'm talking with people about finances. And I tell somebody I'm a business advisor or a CFO or an accountant, and that's oftentimes the common response is, "Oh, I hate numbers." Well, what are the opening comments, the opening remarks about that? Why do most business owners struggle with money? Besides the fact that not everybody takes an accounting class, certainly nobody is given the opportunity to go through a personal finance class. They just don't teach that in American schools, unfortunately. So there isn't a lot of training on personal finance, which then segues to corporate finance, and certainly not through a business school to understand certain accounting concepts and issues. So, because of that, as people are trying to navigate through their business, there are reports inevitably that cross your desk. There is the notion of going to QuickBooks to do your own accounting, to do your own books, and it probably seems like gobbledygook if you don't have the right training. So what happens is you end up saying and concluding, "I hate numbers," when in reality there's just a lack of confidence there. There's some fear, there's uncertainty, and I say in this slide there's even this feeling of feeling dumb, a lack of confidence. And that's really what it is. You don't hate numbers. You like knowing how much money is in your bank account. I'm sure of that. You have this lack of confidence from a lack of training. So we're going to talk about that today. What happens when you're in that mode and you don't do something about it? You have a lot of confusion. That confusion will lead to reactive decisions. It will lead to no decisions, or it will lead to bad decisions. You may end up overspending. You may end up tapping all of your debt or access to working capital. It might mean providing services to customers that you should be charging more to, or other sorts of cash flow issues. So oftentimes Well, I would just say those are the things that happen when you don't address these issues. So, what does a business owner do as they're trying to manage their business if they don't understand the accounting issues, if they don't understand uh, all of those issues? What do? They tend to look at your revenues. You might look at your cash balance, and there are other metrics that will give you a more comprehensive view with the right training. And so, we're going to talk about that today. So, as we if you as a business owner continue down this path of not getting the training, not building up your confidence and understanding what some of these reports are as I said in that last slide, you will tend to look at one metric. Maybe it's revenue, maybe it's the cash in bank, maybe it's uh, just some satisfaction that comes from the fact that you have more customers today than you had a year ago, the growth. And without that comprehensive view, there might be some there might be some decisions made on a bad use of data. I'm trying to figure out how to say that. So, what are some of the other points in here? High revenue doesn't necessarily guarantee financial health. Maybe you're undercharging, you're not charging enough. Your gross profit isn't enough. See, there, I've already thrown out a buzzword that you may not even know, but we can talk about that. Your cash timing your cash timing issues can hide problems. You might have money in the bank, but if you're not understanding working capital, hey, there's another word that is might sound like a scary word. But if you're only looking at the cash in the bank, that can be a factor of just not paying your bills, and your cash in the bank is superficially high because you're not paying your vendors. And if you're managing your cash just by not paying your vendors and that's all you're doing, then eventually you're going to have problems that come from a lack of that comprehensive view of your financial reporting. Another example, margins may shrink silently, and that has to do with the example I gave earlier about high revenue, but on a per customer basis or on a gross profit basis. May not be enough. So that's those are a few examples that are caused by caving to that fear or that lack of confidence. So what you obviously want is you want to have a better understanding of money so that you can manage your business better. That better understanding of money will equal better leadership. It will equal more confident decisions. It will equal decisions that are made on a comprehensive data set. You can negotiate with customers more effectively. You can negotiate with vendors more effectively. You can plan proactively rather than reactively. You A reactive decision is one where you take a phone call from your bank when your banker calls to say you're overdrawn. Well, with proper planning, you can avoid an overdrawn situation, as an example, or buying supplies when you're not ready, or buying supplies at an inopportune time, or something that causes you to be reactive rather than proactive in planning. So that clarity that you will have if you navigate through and become a little better trained and build your confidence and your understanding, that clarity will drive better decisions. You will be able to, as we alluded to, you'll be able to predict cash shortages and surpluses, and then react to that by planning what you'll do or how you'll behave or what you'll change in order to manage a cash shortage, or what you'll do with surpluses. Will you pay yourself? Will you invest in the business? Those are things that you can talk about. Reducing stress by obviously by knowing your financial position. Many times, this concept of "I hate numbers" also goes along with I'm losing sleep. I don't have any idea what's going on with my business, and I need help. So that fear also segues into a lack of confidence and stress. And if you have a better understanding, then you can sit on top of the data and really manage it proactively. So we're getting to a next introductory comment, and I hope you see the trend we're heading in this. We're identifying the problems, what the fallout of that is. So I just want to reiterate and encourage you with the notion that finance is a tool. It's not there to be in your way. It's not there to restrict you from managing your business or paying yourself. Finance is a tool that can help you run your business more effectively. It will convert insights into planned business decisions. It will help you identify opportunities and risks. Both are very important. It will help you build actionable plans from financial data. When I am working with clients that are in this situation, the first thing we need to do is assess what is it that we have? What is the financial position of the organization? Get it away from the gobbledygook and into some sort of clarified assessment of what your financial position is. And then from there, we can make an assessment of the action plan. What is it that we can do? We may not always like all of those necessary steps. We may not like the changes that need to be made, but you can't make any of those assessments unless you have a good understanding of what your financial picture looks like, and that comes from an understanding of your financial situation. All right, so excuse me. Getting into the meat of the presentation, I come back to this. You don't actually hate numbers. I guarantee you, you don't hate numbers. You may not be a mathematician, and you may not want to be a mathematician, and that's okay. You may not want to be an accountant. That's okay. You may not you may not want to carry a calculator with you. I get all that, but you don't actually hate numbers the way you're meaning. You're probably really just conceding to your lack of confidence. You hate that uncertainty, and you don't like feeling dumb. And that's kind of an unsavory thing to say, maybe. But I try to put myself into those shoes, and I reflect on conversations I've had with people, and when they say that, I just think about the what's really being said, what's between the lines, what's the comment behind the comment, and they really just want to serve their customers, do their business, and they've not been trained, and so it is gobbledygook to them. But they obviously like to understand their finances. They want to earn a living, a business owner, people that I'm talking to. So it's really just this lack of training, lack of understanding, um, not knowing what questions to ask, a fear of making wrong decisions because of the gobbledygook in front of them, and as we've been talking about, this leads to a risk of cash surprises. It leads to a risk of mistakes. It leads to a risk of overspending. It leads to a risk of running out of money, which ultimately the end game to that is bankruptcy. So um, getting on top of this fear and getting past getting past the notion of hating numbers and understanding what that is, will be the first step to some clarity in your business and peace of mind in your business. So let's break all of these gobbledygook things into some simple parts, and that's what we're going to talk about in these next slides. Step number one, financial statements are tools, not traps. And maybe what we should do is have a session where we talk about sample financial statements, but we can't do that until I get you thinking about the notion of the concepts of learning some basic things, and and understanding that you probably don't hate numbers, and leaning into this. So I do say it is a truth that though we don't expect you to become accountants, it is a truth that I think business owners should have a basic understanding of certain accounting things, accounting concepts. Warren Buffett, and I've said it in prior sessions, Warren Buffett says that accounting is the language of business. Accounting is the way we talk about the numbers of a business. The numbers of the business tell the story of what's happening with the business as you're out and about serving customers, negotiating with banks, negotiating with vendors. As all of that is happening, it reduces down to a set of books, and reports are the byproduct of that. So, accounting is the language of business. It's the way people draw draw conclusions about your business. It's the way that people interpret what's happening with your business on a trend basis. They look at what has been happening in the past, what's happening now, and draw some conclusions about what that might mean about the future. So, having a basic understanding of your reports is important. It's not in the materials here, but there are th- call it three reports and lots of sub reports. But I'm going to say if you have a great understanding of your balance sheet, your profit and loss as a second statement, and maybe some version of a statement of cash flows, whether it is the one that accountants like to put together or something that ties more directly to your bank statements, some way to understand the cash flow of your business. Money's coming in, money's going out, in whatever timing that is. Understanding that is paramount to you really starting to have some clarity, having some um, uh, building some confidence in your business, and starting to have some peace of mind about the information that you're absorbing and internalizing. So having that basic understanding will be important. Again, not that it doesn't mean that you have to understand everything about double entry accounting, debits and credits, T accounts, and all those things that I'm throwing out that accountants know, but having a basic understanding. A balance sheet is just a snapshot in time, a point in time that summarizes all those things that you own and all those things that you owe, whether they are the sum total of invoices that you owe to vendors, your credit card balances, your mortgage, a line of credit balance. All those are debts, liabilities, and that as a subset of all the things that you own, equipment, property, um, monies owed from customers, actual cash in the bank, all those things that you owe. The net of that is your what you would call on a personal basis your net worth, your net equity in the business, and just understanding that from a balance sheet perspective is important. Um, Many business owners pay attention to the second financial statement, which is what people tend to call the P&L, the profit and loss statement, or the income statement, or depending on your industry in, it might be a statement of activities. Anyway, all those things, that report summarizes the sum total of your revenues and your expenses, payroll, vendors, etc., uh, for a period of time, whether that is the last month, the last quarter, the last year. So that's what a P&L is, a profit and loss statement. So just having that basic understanding starts to give you some sense for the way people will interpret your information. With all that being said, I don't have examples of those here, but if anybody wants to dive into those more, feel free to ask me as a follow-up. But there's still a lot of gobbledygook in there, and we as accountants, we understand what that is. But I would just say, as a business owner, understand those basics and then begin to focus not on every number on there, but focus on the big stuff. Focus on some trends. How do revenues look this year versus last year, this quarter versus last quarter, this season versus last season? what was our cash position this year versus last year? What was our net equity this year versus last year? How are we doing in terms of paying our bills? Is our debt going down? Do we have capacity? You can start to draw conclusions. Do we have capacity for more debt based on all these things? So focus on trends, not every number. Break it down, identify, maybe with your own understanding or with the use of an advisor. Um, Find the key numbers to pay attention to, draw some conclusions about that, identify some trends, and then start to draw some conclusions. One of the ways that you're going to do that is by identifying risks and opportunities within your business, and then what are the metrics and the numbers within your business that drive those risks and opportunities. Also, as you begin to manage those trends, you can identify risks and opportunities. Um, and my last bullet point there, which is partially covered by my face there, ask the right questions instead of doing all the calculations. And again, that takes time. It's not something you have to do over a weekend, but over the course of learning, you'll start to learn the trends. You'll start to learn what some of the numbers mean. And over that course of time, you'll start to interpret the numbers, draw conclusions from the numbers, and then asking questions about those numbers. And that's where you'll start to see the clarity forming in your mind. Number two, focus on metrics that matter. So we have a few points in here that I want to bring up. Obviously, and depending on the business owner and what level of sophistication they have and understanding these things, they're going to probably pay attention to one or two things. I had mentioned that earlier, but let's say that you're paying attention to cash flow. Well, I'll just say these are the 4 or 5 things that I think are important. Again, without understanding every number in there, get a good understanding of these 4 or 5 things. What is my cash flow? Because cash flow is different than revenue. If you're in the type of a business where you provide a service and you don't expect payment immediately upon completion of that service, or even if you don't expect payment in advance of the um, initiation of that service, the execution of that service, then there is a difference, a timing difference between service delivery and collection. And that will create cash flow issues because that timing difference, understanding that timing difference is paramount to really understanding your business, because the timing rhythm for that customer collection is most likely different than the timing rhythm for your outflow, paying your staff, paying your vendors, paying debt payments. It's not always, in fact, it's not usually a nice rhythm where it all aligns. Your cash collection might come in one rhythm, and most likely your payroll is in a different rhythm, and you have to manage all that. The only way you can really manage that is to have an understanding of these concepts. But metric number one, or concept number one to pay attention to, is cash flow. Secondly is profitability. Again, cash flow doesn't equal profitability. Cash flow is the collection of revenues and the payout to vendors or those people who you're working with that you owe money to. Profitability is the difference between the net margin that you're collecting to the not margin, but it's the difference between the net revenue that you're collecting or you're charging, no matter when you're collecting it, but the revenue that you're charging versus the cost to provide that service. That cost might include your own time as an owner. Are you getting enough money to make it worth it to you? The cost to hire staff members, the cost to rent space, the cost to buy supplies. So profitability is that difference between what you're charging and what it costs you to do business, and that delta is your profitability. Before overhead, it's gross profit. After overhead, it's profit, and managing that to a level that is an acceptable return to you is important. And that is not just what's in the bank, because again, we've talked about the what's in the bank concept comes from is very manipulatable based on whether you're paying your bills, et cetera. So that profitability is really important. I tell people, if you're paying attention to this and if you've had any exposure to accounting, I tell people I think it's very important to manage your books on an accrual basis for this reason, to really manage your business. Even if you're filing tax returns on a cash basis, talk to your tax accountant. They're going to tell you to file on a cash basis in many, many cases, and that makes a lot of sense. But to manage your books on a accrual basis, meaning you're putting into your books the dollar value of the services provided, even if you haven't collected yet, and the amounts owed to vendors and payroll and staff, even if you haven't paid them yet, putting them in based on when those things are happening will give you real time data that will help you draw conclusions and manage your business. Okay, so all of those 3 points are on a P&L basis. But it's also important. You've been hearing me talk about working capital, your debt, your ability to pay bills, the cash in the bank. Well, those are financial position concepts. Those are balance sheet concepts. And I don't think there's enough attention paid to balance sheets of business. But if somebody comes to me and says, "Help, I need some help with this. All of this is gobbledygook. I'm having cash flow issues." I am going to look at the P&L, but honestly, I'm going to look first at the balance sheet to understand the financial position. And that's step number one in an assessment. So financial position is very important. Let's move on to number 3. Adopt a CFO mindset without becoming a CFO. We're not trying to teach you how to be an accountant, and you may hate numbers to that extent. You don't want to necessarily live in with numbers that much, but you are going to need to manage this business. So adopting a CFO mindset without becoming one. Using these, once you get some clarity, once you have some understanding, and once you see some confidence building in understanding your numbers, you can start to draw conclusions. You can use those conclusions to draw some insights. And then you can get ahead of the business by planning your strategies, planning your hiring needs. We have 5 people today, but we see this growth. This growth is going to cause our staff to be at full capacity. Gee, when is that going to happen? Well, that's going to happen in 2 quarters if we continue on this trend line. Therefore, we have now 100, what is that? 6 months. We have 6 months to get to there. We have 180 days to plan for a hiring strategy. The only way you're doing that is if you're understanding your trends, you have some sense of your working capital, your profitability, your revenue trend lines, your growth lines, and all of that comes from your financial reports. What are other things you can be investing in? And you can just be preparing for opportunities and challenges. So you might be in a seasonal situation where I just talked of an example of growth and a need to hire. And what if you're in a season where you're going to be entering into a valley where your cash flow goes down because your revenues go down because your demand because of the demand for your services are going down? Maybe that's because of market issues. Maybe it's just because of natural seasonality of the service that you provide. There aren't as many roofs being installed in the middle of winter in the Midwest or in the Northeast because of seasonality. So what do you do about that? You have to plan for your hiring. And I get that a lot of that is intuitive and it makes sense. But having a better understanding of your actual finances will allow you to apply some data-based interpretation along with that intuition. So I do make another point in this slide that says that you'll notice multiple times, and I did it just on that last slide, where we keep bringing up balance sheet issues, and if you're listening to this and you have been historically only looking at your P&L, because that's, you sort of get what your P&L is. Um, have you noticed, and I said it earlier overtly, have you noticed that I keep referring to the balance sheet? When you're doing an assessment, only looking at one or two things, your revenue, your P&L, or your hiring costs or your payroll costs, only looking at those things will not give you a full picture. So the P&L, I mean, the balance sheet gives you a sense for what's happening now. What access do you have to working capital? What is working capital? That's your ability to pay your bills. In a way oversimplified basis, it's your cash, but it's more than that. It's your, if all of your customers paid you today, and if you paid all of your vendors today such that everybody's settled up, all your customers paid, all your staff are paid, all of your vendors are paid, you've paid all your credit cards, everything's settled up, how much cash would you have in the bank? That's your working capital. And that never happens. And so we talk about it a little differently. But we also would throw in there, what is your access to working capital? You may have untapped credit cards, untapped lines of credit at the bank, untapped borrowings from your personal situation, putting money into the company. That untapped working capital is important to understand as well. Those are all balance sheet and financial positions as well. Uh, and those are just as important as the P&L. In some cases, I would say even more important. So just bringing that up because I hear people talking about the P&L all the time. Finally, systems. I encourage people to put some sort of a rhythm into their business to have these sort of financial reviews. If all you're doing is looking at it when you get time to look at it, you're never going to get time to do it, because you've already historically confessed to the fact that you don't like numbers. It's not your most important thing to pay attention to. And because of that self-consciousness, it's not going to be the first thing you look at. Hopefully you're going to build confidence over time, but when you do that, you also need to build systems into place. And if you've been hearing me with these sessions and these webinars, I'm always talking about systems. And whatever we're doing, we build systems to put predictability into place, to put structure into place, to put the ability for growth in place, to put ability for replacing people in place. People inevitably leave. There's always some sort of attrition. Systems help to mitigate the risk of things breaking down when those things happen. So systems in this regard includes having regular financial reviews. It involves clear dashboards for quick insights. Pick the 2 or 3 things that are important to you and pay attention to them through some sort of a dashboard. Get ultimately, I'm biased. You're going to think I'm biased by saying this, but start with having some training from your trusted advisors, from a fractional CFO, or from somebody that can just give you some training. Maybe it's finite. Maybe you're not ready to hire somebody on a regular basis yet. I'll tell you that you'll get benefit from that. We see it all the time, but maybe you just want some training, some understanding, and tap into those resources to help you get past this hump of uncertainty, these fears, and just build some confidence in that, and then decide later whether you need to have access to those resources on a permanent basis. But I would encourage you to find access to those resources at least on a temporary basis, and you'll get benefit from that. Maybe you're a self-learning person. If you want to go onto YouTube, you've already found me on YouTube. Look for other training that's available about financial reporting or other things, but do something to remove that uncertainty, that fear, build your confidence, and the impact to your business will be invaluable and will be more than you can imagine. Bringing all this home, what is the end game? Obviously, we've been talking about this. The end game is financial confidence. Um, that financial confidence, if you're in a sea of other people that are providing services, I'm going to tell you your competitors are more than likely having those same situations. So the more confident you are, the more systems you put into place, the more you run your business as a business, the more you spend time on the business instead of in the business, you will get a competitive advantage. You'll understand your cash flow, your profitability, your financial position, your runway. Runway, there's another scary word. What does that mean? That is your ability to pay all your bills today and in the future. And how long would it take if your cash flow stops? That's a oversimplified way to talk about runway. But that financial position, if you are understanding those things, you're going to be able to rely on that data and take a data-based approach in your planning. You'll do planning. You'll not rely on the things you've historically relied on, like your bank account or your revenue. Um, all of that clarity will give you insights to strengthen your management of the business, your leadership with your staff, and ultimately with growth. So I'll ask you again as we start to wrap this up. Do you still hate numbers? Do you really? My guess is you don't want to be an accountant. No problem. I don't want to be a rocket scientist either. So I get that. But do you really hate numbers, or can we just agree that there's just some training that needs to happen? And that training will produce benefits guaranteed. So I will we'll just end with that and a couple stories, but I will encourage you, we will have as a link in this webinar, and it'll end up on our website as well. We have lots of resources. I talk about it every time. We'll have a little webinar, I'm sorry, a little white paper with these concepts in a white paper that you can refer back to. You'll always be able to come back to this webinar and listen to it. You can always reach out to us with questions. You'll see our contact information here with my phone number, with my email address. That also incorporates our website, which is bakercfoadvisory.com. You can find us there. I will be more than happy to answer questions and help you. You can schedule a consultation or financial review. Happy to have conversations with you. No pressure. Just always, all of our relationships, because we're talking about sensitive information, we're talking about things that are scary. They all just start with a conversation, and we'll make an assessment as to what we can do to help you. We'll give you some insights and go from there. Subscribe to our newsletter. You can find that on social media, probably on our website. I'm going to end with a story. How does all this happen, and what are some examples? I remember usually when I come into a situation, I am helping somebody that is in some sort of a financial challenge. And one situation many years ago, they were in this challenge, and I frankly had to tell the leadership group that they had 18 months before they went bankrupt. Their runway, so to speak, was about 18 months long. And obviously that raised red flags, that caused problems, that caused fear. But the fear then bolstered stick to itiveness. It bolstered an energy to do what they needed to do to change. So then what do? We still don't know what to do. So we did an assessment, and I just sat down with people and said, this is in a more clarified, simple way. This is how this is what your financial position is, and this is what needs to happen. And we just spent a few minutes doing that. And one person said to me, Carl, this 5-minute explanation has been more clear to me than anything I have ever heard by our prior financial leadership that has been helping us in our organization. It's not that they were that the leadership was not smart. It's not that the prior leadership, the financial leadership, wasn't smart, but making the complex simple, and providing some clear one or two metrics that helps people understand is important. And you can do that too if you are properly trained and you get past these fear and really lean into some of these concepts. So I'll end with that and say best wishes. Let us know if we can help you. Thank you for watching. Thank you for your time. Stick with us. We'll continue doing these recordings each month. Next month, we'll have another subject, and it will all be in relation to managing your business. We appreciate you always watching, listening, subscribing, sharing to the extent that you can. That would be wonderful if you could share this and help us build our following. That would be wonderful. Like the page as you, or like the video as you are listening to this. That would all be very helpful. We thank you again. Best wishes, Godspeed, God bless, and we'll talk to you soon. Thanks a lot. Bye-bye.